Hi everyone, my name is Mark Quinn. I'm a tax advisor and chartered financial planner based in Portugal. One of the common questions I'm asked for people relocating from the UK to Portugal is how much tax will I pay? Now, we've covered videos on the tax rates that you'd pay if you qualify for the old NHR scheme or the new NHR scheme. But what happens if you're a standard Portuguese tax resident? What levels of tax do you pay on different sources of income? And that's what we're going to cover in this video. So if we look at Portugal's quick wins, so to speak, there are several. So first of all, Portugal doesn't have any inheritance tax. It was abolished in 2003. It doesn't have any succession tax if you're leaving assets to direct line descendants, ascendants, or between spouses. And it also applies only to Portuguese-based assets, so it's very limited in its application. There's no wealth tax here in Portugal, unlike, for example, our neighbours in Spain. And you can also structure investment assets. So if you're living off investment income, you can structure investments very, very tax efficiently here in Portugal, getting your effective tax rates down to, typically between 3 and 5%, depending on the level of growth within the portfolio. Also, we find that income tax payable in the UK and Portugal is broadly similar. So if we look at the top rate of tax, for example, in the UK, it's 45%. The top rate of tax here in Portugal is 48%, so similar. Now, admittedly, the Portugal tax bands do kick in at lower levels, so that 48% tax payable would have been around 75 to 80,000 euros, whereas in the UK you can earn up to 123,000 without paying that top rate. But equally, in Portugal you can submit joint tax returns, which means that you submit tax returns as a couple, and therefore you can use each other's tax bands if one partner isn't utilising their available bands, which is unlike the UK, because in the UK you submit tax returns individually. So let's look at the most common forms of income that most of our clients have coming to relocate to Portugal. Well, some clients are still working, so admittedly it's a smaller percentage for those still working. Most are living off pension income, investment income, etc. But for those of you that are still working, you're going to be paying tax at the progressive tax bands. Now they start at 14% and they go as high as 48%. So it works in a similar way to how the UK works. The more you earn, the higher your tax rate goes, and you work through different tax levels and bands. If we look at interest income, so interest, for example, on bank savings, cash deposits, in the UK, these will be taxed at your marginal tax rate. So that could either be 20%, 40% or 45%. In Portugal, we have a flat tax rate of 28%. The only exception to that is, as I've said before, if it's deriving from a blacklisted jurisdiction, so Guernsey, Jersey, Isle of Man, Gibraltar, for example, then it will be subject to a more punitive rate of 35%. If we look at the tax position on dividends, so in the UK, we're looking at rates of 8.75% for basic rate taxpayers, 33.75% for higher rate taxpayers, and 39.75% for additional rate taxpayers. And that compares with a standard flat rate of tax in Portugal of 28%, irrespective of the amount of dividend. Again, as it applies to interest, if dividends are coming from a blacklisted jurisdiction, again, they're subject to the higher punitive rate of 35%. But we can see that even at the highest level, the Portuguese tax rates on dividends are preferential compared to the UK. Income from pensions, again, they're going to be added to the progressive rate tax bands between 14 and 48%. The only exception to this is that there are different ways of reporting pension income, and some accountants report on what's called the 85-15 principle. So what they're saying is, when you take income from your pension scheme, 85% of it is deemed a return of your capital, whereas only 15% of it is actually the taxable portion of the withdrawal. So for example, if you took €10,000 out in 1 year, you would only actually actually be declaring €1,500 and adding that to the tax bands rather than the full 10,000. Now this is a grey area and it's open to interpretation, so you really need the guidance of a good local accountant here in Portugal, and if you need any referrals I can give you a few names. Just get in contact with me. If you're taking income from a trust, again, tax rates can be quite preferable in Portugal. So in the UK, we're looking at 38.1% or 45%, depending on the nature of the income you're taking from the trust. In Portugal, you're looking at a flat 28% or 35% if it's coming from a blacklisted jurisdiction. And just bear in mind as well, if you are taking money from trusts as your main income source, there are very tax efficient ways of getting money out of trusts in Portugal. Again, contact me if you need some personalised advice in that respect. If we look at capital gains tax, or if you're generating part of your income from realising capital gains, in the UK, if you're selling share portfolios, non-property investments in other words, then the tax rates are either going to be 10% or 20%. So the highest tax band will be 20. In Portugal, slightly higher at 20%, 28% rather. The only additional point that favours Portugal rather than the UK is that Portugal still have indexation relief on individual shareholdings. So indexation relief allows you to increase your base cost to allow for the level of inflation over time, which effectively reduces your taxable gain. So again, we have that here if you're selling it as a Portuguese tax resident that you wouldn't have as a UK tax resident. If you're realising gains on the sales of physical property in the UK, then the tax rate rather is 18% or 28%. That's now coming down to 24% as a result of the budget this week. In Portugal, it works slightly different. So what happens in Portugal is you pay tax on 50% of the gain, and that's added to your income. So for example, if you make a gain of £100,000 on the sale of a property, 50,000 of that is added to your income. So in worst case scenario, imagine that pushes you up into the top bracket of 48%. Because you're only paying tax on 50% of the gain, the effective tax rate is 24%. So again, it comes back to being at a similar level to the UK. The one area that Portugal isn't very good for is realising short-term capital gains. So if you're an active trader and you're making frequent adjustments to your share portfolios, if your income exceeds a certain level, around €80,000, and you're selling within 1 year of the purchase date, so if you're making a short-term trade, the tax rate isn't actually the flat 28%, it's actually added to your income. So again, it can go as high as 48%. Now there are ways of structuring investment portfolios so you avoid that short-term capital gains tax, so that doesn't need to be an issue if you're taking advice. Again, I just want to finish on a point that I'm constantly talking about, is the importance of planning and the importance of planning early. Try and speak to somebody before you leave the UK rather than when you've already arrived in Portugal, because that will give you the opportunity to plan earlier and use the exemptions and allowances that are available in the UK before you establish tax residency here. And also the goalposts are kind of shifting. As I said, that we now have 3 tax regimes to consider. What may have been good planning under NHR might not be good as a standard Portuguese tax resident. A classic example of this is the sale of one's main residence in the UK. If you qualify for the non-habitual residence scheme, or in fact the new NHR scheme, there's no tax whatsoever in Portugal. And because it's your principal private residence in the UK, there's no tax here. If, for example, you arrive here as a standard rate taxpayer, then although there would still be no tax in the UK because you'd qualify for PPR relief, you'd pay tax on the full gains here in Portugal, which could be quite costly for you. So again, it's important to get the sequencing of your move right, and that can only be done when we know what regime you can qualify, if any, and if not, how you structure your affairs tax efficiently here as a standard Portuguese tax resident. As always, I'm always here to help answer any questions. Please get in touch, and I hope you found this video useful. Thank you.